Come back again. Now we have a session on issues and compliances in related party transactions by CA K S Ravi. Sir, can I request CA Pramodar Hegde, our Vice Chairman, to escort K S Ravi sir onto dais and then welcome him with floral bouquet. Thank you. I would like to introduce CA K S Ravi sir. CA K S Ravi is a chartered accountant with 32 years of experience. After his articleship, he has worked with C&AG. He is a regular contributor for journals like The Chartered Accountant, Chartered Secretary, BCAJ, Corporate Law Advisor, to name a few. He has taken weekly classes to his colleagues and students for 15 years continuously. He regularly gives lectures at Income Tax Department, AG's office, Fiscal Policy Institute, etc. He is a keen reader of books and he is learning Sanskrit apart from his professional updates. With this brief introduction, I present before you CA K S Ravi sir. Over to you, sir.
Somebody wants to drowse a little, the next person should not be disturbed. That's all. Otherwise, it's fine. No issue. Because if he's a bad speaker, what will you do? Obviously, you will say, why listen to him? So those issues, let me see how best I can contribute. Yeah. Related party transactions. They talk about issues and compliances. For me, even if it's just say related party transactions, all those issues and compliances have to be necessarily covered. As it means nothing. Because now we talk not just related party transactions as a common man talks. We talk as though it's a point of law for the companies to follow. Right. Now, what's a related party? If you ask, I know somebody and therefore I have that close relationship and therefore it becomes a related party because each of us can influence the other. And that influencing factor is an important issue for trying to comply with the requirements of law to ensure that the company or its shareholders, it's not prejudicial to them. That's the intention, right? So now let me try to make it. Can I not get the full screen? Yeah, it's there. I think it's working. Yeah, right. Now, section 2, subsection 76 speaks about related party. The definition section. I think you'll have to deal with that whether we want it or not, because we just need to understand who gets classified under that. Be carefully looking at all the issues that I'm discussing, because somewhere or the other subtle issues will emerge. And that's what is important, because what is general, all of us understand. Because we practice, so we understand. But subtle issues which come up, that's where I think we'll have to focus. So directors or his relative, we understand. I don't think we need too much of a clarification. Unless somebody wants to stop me somewhere and raise any questions, please do it then and there itself. I don't think I'll get disturbed about that. Then key management personnel, KMP or his relative, important, keep that as a note. Somewhere it's going to miss. And therefore, we should try to ask, what was the sanctity of not having KMP somewhere? Then firm in which directors, manager, relative is a partner. See, they just moved away from KMP and they started talking about manager. KMP is not there. Firm in which the director, manager, or their relatives is a partner. So what does it mean? Wherever KMP is a partner, will you be able to treat that as not a related party transaction? Why did they miss that out? When they said KMP is one of the related party. Now, when you talk about firms, KMP is not appearing there. Then a private limited company in which director, manager, or the relatives is a member or a director of that private limited company. Now again, KMP is missing. So does it really mean absolutely a KMP of that particular company alone is relative, but all the other areas where he is associated may not be a related party transaction if there's a transaction there. Let me explain this a little later when we go, what we should really do in situations like that. Then a public limited company in which director, manager is a director and holds along with his relatives more than 2%. That 2% doesn't appear in the other places. But in the case of public company, the holding is so large. So they say, if it is less than 2% of the shareholding, they will still not be treated as related parties. But if it is more than 2% put together, aggregate, accumulated, then it will fall under the definition of related party. Any body corporate whose board of directors, managing director, manager is accustomed to act in accordance with the advice, directions, instructions of a director or a manager. So there, what is the issue? That somebody is going to listen to somebody, there's going to be a significant influence, and therefore it could be related party transactions. This is sum and substance. But the problem doesn't stop here. Definitely we are looking at Companies Act, and therefore if you want to restrict it to Companies Act, I'm afraid we'll have to go a little beyond that. Because if you start looking at some of these definitions, you've got Accounting Standard 18, you've got Ind AS 24, you ask something in CARO, there's something in income tax, there's something in GST, then LODR, listing obligations and disclosure requirements. So now the question is, can we restrict ourselves to what is stated in the Companies Act? If you ask me that question, honestly, I will tell you, no. Wherever, whatever is applicable, you may have to apply your mind to reach those stages over and above what is here. Then again, Companies Act itself has got its own complexities. As you go along, you will see what can be done, what cannot be done. Right. Often, unless related parties transactions are large, it can happen in large companies, it can happen in listed companies, small private companies and all that. Maybe it's so limited that we may not have to worry too much about it. But if you come across issues, then you will start understanding how difficult it is to interpret issues there. So that's the sum and substance of the definition part of it. I'll move further. Then any person on whose advice, it doesn't stop there. There's also on whose advice, directions, instructions, advice, directions, instructions, a director or a manager is accustomed to act, or the company is going to act according to such directions. Maybe the holding company will give directions to the subsidiary. That also could be one of the issues. Any company which is holding company, subsidiary, associate, three issues there again. Holding company, subsidiary, associate. When you talk about associate, now my question is, a subsidiary has got an associate, whether that associate will also have a related party stand with respect to a holding company, questions to be asked. Other companies as prescribed, as it stands today, other than what has been stated in 2 within bracket 76, I don't think there's anything more. Then those which are in the IFSC or SEZ, that related party transactions will not arise at all because they're given a special status. And therefore, we should not worry too much about it. But then a similar holding company or a subsidiary in a foreign company would be treated on a different footing altogether. Because if you understand SEZ and IFSC to be outside the domestic area of the country, special status being given, there's a distinction there. And that has come by way of an additional notification or a circular to, it was a notification, yes. So now, who are these relatives of directors, relatives of KMP? How do you look at them? Again, some issues there. Let's look at what those issues are. Members of HUF, they're all relatives. That means a director has got an HUF and that HUF wants to deal with the company. It is a related party transaction. Husband and wife, obviously. Then father and mother, yes. Son and son's wife, Keep looking at it. Very carefully keep looking at it. Sons and son's wife, daughter and daughter's husband, brother and sister, stepfather and stepmother, stepson. What is there? Stepdaughter is missing. Why? What was the sanctity for the stepdaughter to be missing? God knows. So far it stands as it is. Then look at this. Daughter-stepfather relationship will prevail, but father-stepdaughter relationship does not join the bandwagon. So you can't take things for granted. If you read words very carefully, you'll come to understand that you have to be careful. And there could be a possibility that you overstep, then come and have a look whether it's falling at all in these areas. Then you'll be clear what can be applied, what should not be applied, and the law does not speak of it. Why the law does not speak of it? I don't have an answer, because there's nothing in any literature that provides this information. So daughter-stepfather relationship will prevail, but father-stepdaughter relationship will not prevail. Then similarly, grandparents, grandchildren, brother's wife, sister's husband have been left out from the definition. You go back to at the time of registration when they define a family, that is different. And when you go to gift, that is income from other sources gift, that is different. You can't universally apply the same rule everywhere. We have to be careful. Because somebody went with the planning thinking that, oh, gift is exempt under the income tax law. But when they went into the sub-registrar's office, they said, pay the stamp duty. They don't fall under the definition of family here. So to be very careful, especially with respect to family being defined differently in different law, different acts. Okay. So this is with respect to, I have defined what is a related party transaction. I've defined who is a relative. Then what type of directors are included? When we talk of directors, you have umpteen number of directors. There is company specification of definition of details, rules 2014. Okay. Other than an independent director, you have all directors coming in. See, we talk about independent director of a holding company. Independent director of a holding company and a KMP of a holding company does not become a related party transaction. But the other way around, in the case of a private subsidiary, the independent director as well as the KMP will get involved. The other way is, one way is not possible, the other way is possible. So you have to look at it, whether he belongs to the holding company or he belongs to the subsidiary. All types of directors are included. Who are those? Executive directors, independent directors, alternate directors, additional directors, nominee directors, managing director, whole-time director, and non-executive directors. Everybody is involved. Except in the case of a holding company, having an independent director or a KMP, they are not related. But in the case of a subsidiary, they become directors who can come into the ambit of related party transaction. So everywhere you have something or the other coming up and then throwing surprises to us to ask this question. And therefore, we have to be clear. Read anytime you want to make an attempt to bring in related party transaction as a part of disclosure, make an attempt to look at the different laws or the standards that are applicable to them and then take a stand. We have got director, KMP, and manager. Okay. Director, I don't think I need to define. I'll just leave it at that. KMP, key management personnel, CEO, MD, manager, CS, full-time director, CFO. These are all KMPs, right? I already told you that KMP does not figure. Relatives of KMP does not figure. But do you have to look at it that way, sacrosanct with respect to the provisions of law? Be careful. There is something called wherever corporate governance is applicable, maybe they too will get covered. And therefore, we have to be, see, the other issues, corporate governance also will speak much about the provisions of law. And therefore, the directors have to be very careful in trying to state what they believe to be related parties for them over and above what the law provides. Very important issue. Please keep that in mind. It's just not enough to say law says this, so I'm stuck with this. No, Corporate governance principles will ask you to go much beyond that. LODR will ask you to go much beyond that. So take care. Okay. Then group of people who are at realm of affairs, right? I don't want to get into that. Engaged in planning, directing, and controlling, PDC. All those people will become part of this group. Then manager. Now, you see, you have got three words: managing director, whole-time director, and a manager. When do we use whom, where? Can they simultaneously act? These are some of the issues. Of course, it's provided somewhere elsewhere in the law, but then we have to be very careful. We know who is a managing director, no problem. If there's no managing director, there can also be a whole-time director who does not take the position of a managing director at all, but he functions as though he's a managing director. Unless specified that he's a managing director, he could only be a whole-time director. Okay. And then you have a manager who can work along with either a whole-time director or a managing director. And can we have whole-time director and managing director together? There is no prohibition anywhere. There's no prohibition. But strictly speaking, when you have a managing director, there's no need that a whole-time director should be there. Or whole-time director comes in because managing director is not there. Conversely, that's a statement which I will make. Body corporate, we all know. But what it does not include, it does not include a cooperative society. It is a body corporate, but does not include a body corporate under the company law, not a body corporate registered under any law relating to Cooperative Societies Act. That means, according to me, what is a body corporate? Anything that is registered under a law is a body corporate. Very clear. But for Companies Act, they say, we don't want to look into that. Just leave that aside. Any other body corporate as may be notified from time to time. Even a firm as such is registered. Just because a firm is registered, does it become a body corporate? If you ask me that question, I will say no, because the partnership law does not consider that to be a body corporate. Otherwise, anything else that is registered under law will be a body corporate. Associate company, it's not a subsidiary. Then when do I call something to be an associate company? When I have an influence, a significant influence, or I'm holding shares equal to or more than 20% of the paid up share capital, then I become an associate until I reach the stage of a subsidiary. We understand subsidiary 51% shareholding. Until then, I still will continue to be an associate, but I must be holding 20% or more. So that's with respect to all these are important, because as we go along, a lot of issues will emerge, and therefore, then what is control? That means where you have got the power that you can exercise to get things done in a particular way is a control, right? You have all the power. So therefore, policy decisions and with respect to management rights, shareholders agreements, whatever you do, and that at that level, if you're able to exercise your rights, then it means control over assets, liabilities, functioning, all that. So now, what are the transactions within the ambit of RPT, related party transaction? There are totally, if I understand it right, there are 7. I put that into a nutshell, which all can come. If anything falls outside this, take it from me. I will simply say, I'm not carrying on any related party transaction. Right? I can say that. By law, I can say that. So what does it mean? The first one, sale or purchase of goods and materials. That's the first one. Sale or purchase of goods and materials. First item. Then sale and purchase of immovable property. That is the second one. Then the third one, it relates to leasing of properties. Very interesting. Leasing. I will speak about it a little later. Leasing of properties is the third one. Then you have rendering of services. Fourth. So what do we come to understand? We come to understand that everything is getting covered. But then I will give you examples where it is not covered also. We'll look into that. Then apart from that, appointment of an agent. Agent for what? For anything. It could be for purchase of materials, purchase of immovable property, rendering of services, whatever. All of them will get covered. Then Fifth one is appointment of a related party to an office or place of profit within the company. Office or place of profit. Okay. Then the next one is underwriting the subscription of any securities or derivatives. So how many did I cover? I think I've covered 6. Sale, purchase, leasing, purchase of immovable property, appointment of an agent, then underwriting of shares. 6th one is a place of profit or an office in the company. Okay. This place of profit can be in the company, in the subsidiary, in the associate. All of them will turn out to be related party transaction, especially that. And what is the rule? Especially holding an office of drawing a remuneration of more than 2,50,000. 2,50,000 is a restriction. It is a related party transaction, but what happens if it transgresses the basic limit of 2,50,000? I'll deal with that. Then what happens? Now, even related party transactions, it can be in the ordinary course of business. It can be at arm's length, right? But still, it will be a related party transactions. How to deal with those which are within limits and those which are outside the limits is again a question that has to be answered. What will happen? First is compliance, then disclosure. You must understand that related party transaction is one is with respect to the compliance of laws which are there, and the other one is with respect to reporting. Disclosure and then compliance. These are 2 issues that you have to deal with RPT. Then which are the laws that will deal with related party transaction? Companies Act, we already know, we have been talking about that. SEBI, Listing Obligations and Disclosure Requirement, Act of 2015. Accounting Standards, we have 2, AS 18 and Ind AS 24. There are secretarial standards dealing with that. They have to look at that. Then Regulation 23 with respect to LODR. These are some of the areas, but I will still go a little further because you have some reporting to be done under CARO. Then tax audit report, you may have to related party transactions 40A2. Then GST, distinct persons, related parties, Schedule 1, which clearly says that even if you don't pay consideration, we'll be treating that as supply. See, everywhere. Now, how important it is? It's quite important. Section 25, distinct persons, related parties, even without consideration, Schedule 1 says tax it. It's a supply. Now, what is ordinary course of business? To say what is ordinary course of business, what all should you look at? First is MOA. But is it sacrosanct? If you ask me that question, I'll simply say, no, not enough. I may be doing something more than what is in MOA regularly, and therefore it can be ordinary course of business. That has to be looked into. So MOA cannot be the only thing, but you have to look at MOA for that. Then there will be policies which will be laid out to say what is ordinary course of business. Large companies will have to bring in the policies accepted by the audit committee and passed by the board. Then this case came up for a discussion, and there they have said that merely articles and memorandum of association, MOA of the company would not be sufficient evidence to say what is ordinary course of business. Now the next question comes, if that is so, then what is ordinary course of business and what is not ordinary course of business? In guidance note, Institute of Chartered Accountants of India has stated what is not in the ordinary course of business. Let's have a little look at that and then move forward. Yeah, please. No, relating to having an audit committee, right? And policies, not every company will have audit committee, right?
Okay.
If audit committee is not there, the matter is simply moved to the board.
Okay.
Right. Now, which are the companies which are supposed to have audit committees? If you ask me that question, all listed companies are supposed to have audit committees.
Okay.
Right. Then next, every public company which has more than 10 crores of paid up capital will have to have an audit committee. Then rest, it's voluntary for them to have or not to have. And if they don't have, then they simply move things to the board. Yes, sir. Yeah. Okay. Am I clear? Okay, right. How will somebody help me to come out of this? ಸ್ವಲ್ಪ help ಮಾಡಬೇಕಲ್ಲ sir. I have to go to the other. ಇಲ್ಲಿ ಕಾಣಿಸಲ್ಲ.
Which one?
I have to go out of this and go to the next.
Okay, escape.
Okay, escape. Okay. Then this can
Close this.
no, better would be. we take
Take them.
here.
Yes, sir. Pretty
Right. So I have to move between the two. Okay. Now, Institute of Chartered Accountants of India has said what is not in the ordinary course of business. Can everything be in the ordinary course of business? No, not necessary. Here it is. What is not in the ordinary course of business? Complex equity transactions. Normal equity transactions, obviously they're in the ordinary course of business. But he says you have methods of trying to create transactions with shares between companies, between venturers, between investors. They say, no, we don't agree that to be in the ordinary course of business, right? Because issue of shares in the ordinary course of business is fine. But if you create a complex transaction, then somebody has to look into that, and they're cautioning the auditors to say, please have a look at it. Don't treat that as in the ordinary course of business. Transactions with foreign entities in countries with weak corporate laws. Yeah, we can have transactions in places where there are no corporate laws at all. Then they say, no, please have a look at it. Now, what is the consequence? I'll tell you, when it is going out of ordinary course of business, or when it is not on the arm's length basis, it's just not enough. Audit committee approves, it is taken by the board, it's just not enough. It simply has to move to the shareholders. Shareholders have to be kept abreast of some of these transactions. That is the intention. And non-compliance, auditors will report. There are penalty provisions, which time permits, I'll take you through that. If no consideration is exchanged for leasing of premises, rendering of management services to another entity. Yeah, a lot of places, you know what happens? They share common accounting software. You have to charge. A lot of people don't do that. A lot of advices you give. If it goes on record, you're supposed to charge. That's an arm's length transaction. Where do you go to understand arm's length transaction? Where do you understand arm's length transactions from? Transfer pricing, right? So you'll have to look at that to find out whether it's arm's length or not. What you would have done to a third party who's not related to you, that's the way that you have to answer. Even from the point of view of corporate governance, you'll have to rise up to that level. Then sales transactions with large discounts or huge sales returns. You do the sales today because you want to hike up your year-end turnover, and you reverse it in the month of April. And this is a prevalent practice. Defeats corporate governance, defeats audit procedures, principles, and we still do not want to qualify that. I've seen that. I'm making these points out of practice. Please understand that we do not want to look into this, either because there's a management pressure, or many of us don't even look at what is a related party transaction. Transactions with circular arrangements. That's all. You do sales and then promising to purchase back later. There will be no agreements also. But then you find transactions happening subsequently, and you are supposed to comment on that. Transactions with changing terms during the life. You keep changing according to your own. See, the issue is, why are people doing all this? The object of trying to do that is either to escape from payment of tax, or you would like to see that your share valuation goes up, or you would like to distribute profits. So these are some of the issues, and therefore there's a bar on trying to do that, and therefore the related party transactions have to be commented upon. Right. Yeah. Yeah.
Say if the sold raw material and I bought back finished product.
Yeah.
In that case, documents are there, everything is fine. So will that fit into such?
There are two different transactions altogether.
So
There is a
I-
change.
change in the
And our
identity.
ordinary course of business is that I'm going to do it. And that's a regular process that somebody processes because I don't have that facility here. That cannot be within this. It's in the ordinary course of business is what we are trying to prove. But where you artificially build up transactions, that will not be in the ordinary course of business. The prime importance to this is no artificial buildup. That's what is supposed to be looked into. And if there is an artificial buildup, there must be a reason behind that. The auditors will have to look into that. That's the intention. The law asks for us to look into that. Right?
Okay.
Yeah, good, good. Keep asking questions, it'll be interesting. And see, the institute also has come out because we have examples of this. Court cases are there. Yeah. Yeah. Lot of. No, let us not accept the fact that it is not artificial. If it is done in the normal course of business, it just happens. I don't have to be surprised. I don't have to answer a question. I am sure. See, the principles of corporate governance today is that philosophical level, and you have to prove that you are beyond all that. It should come so naturally. And anything that is natural, you don't have to worry about it. You don't have to explain about it. You don't have to bend your head towards it. You are straight. But if you are going to create artificialities and we all accept, I'm making this point very clear and I speak this across. We are not supposed to do that because there's so much of responsibility given into our hands. They respect us. And therefore, we are supposed to be at that level. And that's the expectation of people who sign in public. Anyway, I'll keep telling this. It may emerge anytime. I can see so many things not going right. And when a person does anything right, he doesn't grow to that extent. And it is not fast. Where you see fast growth, you can assume there can be things which are going wrong. Not that it is always correct, but then there are issues. I can speak with examples. I will speak, but then that is not what is expected of people who are qualified as chartered accountants or any professional for that matter. Yeah. Then arm's length price. I don't think I need to speak much about it. What are those methods under transfer pricing? Comparable, uncontrolled price method, 1. Resale price method, 2. Profit split method, 3. Cost plus method, 4. Transaction net margin method, 5. Any other that may be prescribed, they have prescribed. They said, okay, look at all the practical issues that emerge. And if a assessee wants to put up, here's this one that needs to be considered, that could be one of the methods. It could differ from place to place. Okay, right. So you can probably rely upon that. Exhaustively dealt with, lot of case laws have come, and we can say what is arm's length price. What is arm's length price principally? Simply it says you deal with a third party. The way you deal with third party, you deal with your own related party. That's all. So what happens now? If hundreds of them I have done in a particular way, this one particular related party I'm going to do the similar way, I don't have to stand to explain anything at all. I've charged somebody on a sales ₹1,00,000. I'm going to also charge the related party ₹1,00,000. I think it answers the question very easily. It may look easy, but there could be circumstances where somebody has to apply their mind. And that is what is important as professionals to take a stand, whether the related party is vitiated or not. That's where we stand to answer, right? So arm's length, I don't want to talk much. When you deal with unrelated parties, how do you deal? That's what you deal, right? Preferential allotment of shares, very interesting. When we say allotment of shares, I'm asking you whether it's a related party transaction. Suppose you deal with a related party, preferential issue is there. What happens? What did I say? I told you to look at those issues. What is a related party areas that are to be covered for related party? I told about goods. I told about services. Then I told about immovable property, underwriting, all that I told you, right? Very systematically. But you look at this, until you allot those preferential allotment of shares, until you do that, it is not goods. It's not goods at all. It's only a right. You did not describe there. So people have said, until it becomes goods, only subsequent events will be a related party transaction, but preferential allotment of shares cannot be part of related party transaction. Okay? Because already shareholders have looked into that. Right? When it ultimately goes to the shareholders, that is where the whole thing will rest, even if there is a deviation. So first question is, when should it go to shareholders at all? As far as preferential allotment of shares are concerned, it will definitely go to shareholders. One. Second, it is not goods until share is goods only when it is allotted. Not when I have the right to receive those shares. It's no goods at all. Is it a service? It's not a service. It's a right. So therefore, it's outside the ambit. That's one example that comes to say that not all transactions can be related party transactions. How do people look at it is a different issue. If people look at it with good governance, they will always say, doesn't matter, it doesn't fall under a related party transaction. I would like to take that on record and then give my approval or not give my approval. So that's what happens. Corporate guarantee, related party or not? See, you get in, see, what is normal, all of us know what is a related party transaction. What is abnormal or what is subtle is what we have to understand. Always I've believed in my practice years to only say what is normal, even the public knows. They will come up with more information than what we have got. But what is subtle? That is what we are supposed to take out and then tell them, be careful, this is what is going to happen to you. And that has been many times, it has surprised all of us that we try to take those subtle issues and then say, you are going to have a problem sometime later. I think we'll have to look at that. Now look at it. When you look at related party transactions, what sections will you look at? If you ask you that question, it starts with 184. Then a little bit of 185 you have to look at. I will tell you what they are. 186 you have to look at. 187 you don't have to look at. Then you have to look at 188, which is a related party transaction only. Then you have to look at 189. These are the sections that you deal with when you are dealing with related party transaction. What is 184? If you ask me that question, my answer is very simple. What should the board of directors do in the first board meeting? What should they do? They have to disclose their interested parties in the first meeting itself. MBP1 form is to be submitted. There's a responsibility on the director. He first itself in the first board meeting every year, every financial year, he has to do that. It starts from there. 185 deals with lending, borrowing, book debts, creation of book debts, advances to directors. Right. Now, will you call this as a related party transaction? If somebody asks you that question, my answer to that is, there's a specific question already on that issue. Why ever treat that as a related party transaction and go through that entire gamut of activities that you should do? 185 will take care. Once what is in 185 is more sacrosanct than 188. Reason being that when you give loan to directors, you have to be much more cautious than simply talking about related party transaction. So there are methods, processes for you to do that. Then you go to 186. It talks about investments and book debts from one corporate to the other. There we talked about directors or related or KMPs and all that. Here we are talking about company to company. 186, you have to look at that. Now, company to company, are we related? Is it a related party transaction? The answer is no, because 186 will take care of it. Right. What does 186 say? It says you want to invest, you want to lend by way of debentures. They say 60% of paid up share capital plus reserves plus share premium account. Then next one is, if you don't want to include share capital, 100% of free reserves and share premium account. So these controls are there. Now you go to related parties, none of these will happen. And somebody can take a decision convincing everybody. No, the law says, I'm superior, please listen to me. If it is falling under 185 or 186, don't come to 188. It's not covered under 188. I have seen where notes to accounts, including auditor's report, stating what should have gone in 185, 186, they say under 188. So you have to be careful. It can't get included in 188. It's not part of 188. Then 187, it's not important for us. Reason being, whenever investments are made, such investments have to be held in the name of the company. So I don't think we need to discuss that issue. It has nothing to do with today's discussion. 188, yes, obviously, 188 is dealing with related party transactions, which we are talking now. 189 deals with registers to be maintained with respect to such contracts, MBP4. All these have to be looked at, and if you contravene any of the provisions, there are penalty provisions. I'll speak about it a little later. Corporate guarantee. That's what you're almost stepping into the shoes of lending to somebody. That means on your strength. Therefore, 185 and 186 covers. Then what is office or place of profit? Office is any position of a related party for a remuneration in excess of 2,50,000 rupees. No, even if it is for 50,000 rupees per month, please take it from me, it's a related party transaction. But the permission to be obtained is only limited. People will say it's reasonable, it has to be paid. 2,50,000 that the company law provides. But if it is beyond 2,50,000, what should be done? Related party transaction, no doubt, we accept. But who will bell the cat if it is more than 2,50,000 is a question that needs to be answered. So we look at that, okay? Then the other thing that comes up is that as a professional, suppose, let me assume that I was the director of the board. Then I should not be paid a remuneration of more than 2,50,000 per month. Next question that comes up is, yeah, there are people being paid more, no doubt about it. Yeah, the act says up to 2,50,000 I permit you. What to do if it is more than 2,50,000? That is one question. Second question is, I'm a professional, I render services other than being in employment in a professional capacity, that will not be counted. That will not be counted for the purpose of 2,50,000. But whether it's a related party transaction, yes, it's a related party transaction, but will not get covered under place of profit or place of office. Okay. Then as long as it is less than 2,50,000 a month or such amount as the board may decide, depending upon the competence, it will be treated as arm's length in the ordinary course of business. So that's another issue. More issues will come up. It's just not enough just to say that it is within limits, so I can do what I want. No, that's not the issue. Okay, that I don't want to cover. Okay, now what did we say? We said leasing is part of related party transaction. Now, what about rent? Is rent equivalent to leasing? If you ask me that question, leasing of machinery, leasing of buildings for commercial purposes may not be on rent, but then it goes by lease, proper lease, because we are stuck by the requirements of accounting standard 18 and 24 also. So what do we do that if it's not falling under Companies Act, but falls under accounting standards or falls under LODAR, what do we do? How do we look at that? Anyway, keeping that aside, leasing is covered under 188, which I've already discussed. But renting, what they say is it doesn't get covered under this one, only because it's for a short term and on a monthly rent. And other than use, it has nothing else can be done on that. And therefore, renting is outside the ambit of the leasing that has been described. Okay, so license agreements are rent, nothing are different from leasing agreements, hence are not covered under section 188. Okay. There are two companies which are situated outside the country. Two companies situated outside the country. Now they do the transaction. And a company which is a holding company in India, will it be a related party transaction? If you ask that, what would be the answer? Two subsidiaries transacting between themselves, they are outside the country, and a holding company in India, would it be a related party transaction? If you ask me that question, no decision has been taken. It has been taken by the subsidiary independently. Therefore, under company law, it may not come under related party transaction. But if you go to Ind AS, they say, even if transaction takes place between subsidiaries, which are located outside the country, still you will have to report as a part of your reporting system of related party transaction. Therefore, we can't just stick to section 188 to say it's a related party transaction or not, because you may have to go to those standards and understand what type of transactions still will have to get reported. Though the procedure of going through audit committee or the procedure of going to the board or the procedure of going to the shareholders, will not arise because company law doesn't cover that. But reporting requirements will be there. Buyback of shares, not a related party transaction. Reason being, it's a scheme covered under the company law, specifically covered, and therefore go even if you are dealing with related parties, maybe subsidiaries, maybe associates, whatever, still it will not be a related party transaction. If you ask me logically, if your mind is asked to be applied to that, you will simply say it is a related party transaction. But the law says, don't worry about it, leave that aside, doesn't get covered under 188. Close. Okay. Now, my friend here asked me, should everybody have an audit committee? Right. Not necessary. I've told you, paid up capital of 10 crores or more of public limited companies and all listed companies. Otherwise, there's no audit committee. You don't have to have. Right. Now, what happens if the audit committee is not there? Because 188 speaks about audit committee. Then in which case, if you don't have an audit committee, then the board will take position to that and then decide on that issue. So ultimately what we are saying, if there's an audit committee, if it is in the ordinary course of business, if it is at arm's length, you don't need to go to the board at all. Audit committee gives the approval. But if audit committee is not there, then the board gives the approval. So that's the thing here. Then the other issue that comes up is, there is an audit committee. There are also the board. Even before the audit committee deliberates on this particular related party transaction issue, if the board deliberates upon it, what happens? Is it illegal? There's an audit committee which has to necessarily pass through the audit committee, get its approval, but the board takes it up for the subject of discussion, and then a decision is taken. What next should be done? If you ask me that question, the answer to that is very clear. Audit committee approval is a must. Even if the board has taken a decision, it would not be sufficient. No doubt it is irregular, but it is not illegal. Board has first taken a decision, may not be adequate. It has to come back to the audit committee. Audit committee has to give its approval. Very clear. Okay. So by chance, if something, see, what are they trying to do? Let me tell you. They made a mistake which ought to have been treated as illegal, but they whittle it down to say, okay, we'll not treat that as illegal, we'll make it irregular. Now, having precedents like that, we need to accept that and move forward so as to find comfort somewhere to practically work. Otherwise, penalty provisions will arise. So they say, no, we will agree, it's irregular, but let it come back to the audit committee because the section is saying that. If audit committee is not there, then don't worry. The board, whatever it has done is correct. When do you want approval of shareholders? Do you want approval of shareholders at all? So let us look at this step-by-step approach. First is, wherever there's an audit committee is mandatorily required, or sometimes there can be an audit committee voluntarily. Then it has to go to the audit committee. There's no choice once the audit committee is there. Then what type? All related party transactions, whether in the ordinary course or not, whether with arm's length or not, has to be dealt by the audit committee. Then, when does it go to the board? The answer to that is, when the audit committee has given its approval, but it's not in the ordinary course of business, or it's not as arm's length, maybe they'll substantiate 100 things. Then the board has to give its approval. Has to. That's where it moves. Suppose if it is in the ordinary course of business and at arm's length, should it go to the board? My answer to that is no. It stops at audit committee. You don't have to push it to the board, not required. Because ultimately the authority for approval lies with the audit committee, unless that it is not in the ordinary course of business and not at arm's length. Then it has to go to the board. Should it go to shareholders? Yes. There are limits prescribed for related party transactions. And if they transgress that limit, then obviously it has to go to the shareholders for approval. What are the limits? It has been provided under the law. I have a subsequent slide coming to that. And whether it is the audit committee or the board, circular resolution is not possible. They have to physically meet. That's another important issue which you should keep in mind. Circular resolution by circulation, not permitted. Yeah. Which are those transactions which require shareholders approval? Please take note that if it crosses certain restrictions, then it has to go to shareholders, mandatory. There's no choice. So sale, purchase or supply of any goods or materials directly or through appointment of an agent. I've covered everything with respect to sale of goods. Transactions value greater than or equal to 10% of the annual turnover of or rupees 100 crore, whichever is lower. Right? 10% of the annual turnover or 100 crore, whichever is lower. If it crosses that limit, it has to move to the shareholders. Then selling or otherwise disposing of or buying property of any kind, again, it is equivalent to not turnover. Please understand, it is net worth. Greater than or equal to 10% of net worth or 100 crore, whichever is lower. In the first case, I talked about turnover. In the second case, I'm talking about net worth. Leasing of property greater than or equal to 10% of net worth or 10% of annual turnover or rupees 100 crore, whichever is lower. So here either you can apply the net worth method or you can apply the annual turnover method or 100 crore, whichever you apply in the beginning, you have to 100 crore also, it's the same thing will have to apply. Availing or rendering of services greater than or equal to 10% or rupees 50 crore, like our tax audit, 1 crore or 50 lakhs. So for services, they brought it down to 50 crore. Place of profit, monthly remuneration, sorry, it's not greater than 2.5 lakhs. It should be equal to or less than 2.5 lakhs. Please correct it wherever you want. It can't be greater than 2.5 lakhs. Sorry, this is shareholders meeting. Yes. In the case of shareholders meeting, if it crosses 2.5 lakhs, you have to go to shareholders meeting. If you want to restrict it to the board, it should be less than or equal to 2.5 lakhs per month. Underwriting, greater than or equal to 1% of net worth. Underwriting commission, whatever you pay. Then brand usage or royalty, which is not reflected in those things. But now a notification has come. If brand usage or royalty payment should be greater than 2% of annual consolidated turnover, because brand always will come with consolidated financial statements. They value based upon that. And therefore they say, if there is no consolidation at all, if it's standalone, then it's only the standalone turnover. So greater than or equal to 2%. It has come by way of a notification. Yeah. I've already discussed. I don't think I need to deal with this slide. First is the audit committee, compulsory if the audit committee is there. If the audit committee is not there, then it has to go to the board. If the audit committee is there, approval happens at the audit committee. One. Second is, if it is at arm's length and in the ordinary course of business, it doesn't have to go to the board at all. What is not in arm's length and what is not in the ordinary course of business will move to the board. And what crosses or transgresses the restrictions given to companies, then it has to go to shareholders. Finished. I think that's the thing. We have dealt with that. So now what are the disclosures? I already told you, directors will have to report in the first board meeting, every first board meeting, every year. And any changes, as and how the changes happen, they'll have to, in the next board meeting, they'll have to take it up. KMP within 30 days of appointment or within 30 days of whenever changes happen. Then they have to maintain a register. What register? Register of contracts with related parties in MBP4. And how many years? 8 years. You will have to maintain this. Now people ask whether it should be in register form or it should be in soft copies. Doesn't matter how you hold. Whenever somebody asks for it, you'll have to take a printout, certify and give it. You can hold it in soft copy. Right. I've looked at it. I think recently we had some work with Tata Coffee. Excellently maintained. There's nothing that we can, you ask with a company law provision, they just come out with that. They say, we have a soft copy, sir. We'll print it out, sign it and give it to you. Or we'll send you the PDF document. Those are the methods in which larger companies maintain, and a lot of them are software driven today, and it will keep prompting you what you have not done as per the statute. Yeah. Yeah. Yeah.
Which tells that, for example, a director who is also a partner in any one of the LLPs, so that becomes a related party.
Correct.
But the director, if you see, he would be a director in the private limited company, LLP would have the partner as a corporations. So it will have other corporations as a partner in it.
Agreed, agreed.
And this director will be a nominee partner only representing the main corporation. So will it also be treated as a related party? Because all the decisions will be taken by the main corporate who is having the main
No.
partnership.
I'll ask you this question. Why are we ever worried about the director at all? He is not going to make any disclosure. He will only say at the beginning of the year, I'm a related party in so. Right. Now, this disclosure requirement, accounting standards will apply to the company. We are worried about the company. Now, the company is a member. He is only a nominee director.
Correct.
It applies to all nominee directors. So long as you have a nominee director going into the LLP, obviously this company has to report everything. I've said that directors include all. Anything that is related to, even assuming that nominee was not there, still it is the company which is functioning in that LLP, and therefore that LLP becomes a related party.
No, it's not the same company, right? It will be some other company. For example, in LLP.
Let me understand that. You have to give very clear. See,
Okay.
I understand a company sends its directors because it has made investments in LLP.
It has not, but for example, there are three companies.
Yeah.
A and B.
Correct.
The director in company A is also a partner in B.
In LLP.
So some unrelated company C is the partner in LLP. The
One by one. Now, how has he been sent into the LLP from the third party company? How has he been sent? In what capacity has he been sent?
nominee partner. The company
No,
A,
nominee partner, I agree. What did the company do? Did he do investments?
there will be normal course of business transactions.
No, I would ask you this question very clearly. How am I related as a company? Third company. I'm not even looking at A where he's a director. I'm a third company. Third company has transactions with LLP. I agree. Now, I would like to know what is the relationship between the company in the ordinary course of business. If I'm doing business, I don't have any relation at all. Because what is it that to become? I must be one of the members of that. Then I become a related party. But I keep having crores of rupees of turnover. That by itself does not become a related party unless I've got an influencing factor on the LLP. Assuming that there's an influencing factor, then it is sacrosanct for the company, third party company, to disclose everything. I will tell you because all my sales is a purchase for him 100%. Then I can twist him and turn him the way I want. I have an influence on him, significant influence. That being the case, he becomes a related party to me, irrespective of the director being there or not, and therefore I have to report.
Okay.
Significant influence is also accounting standards requirement. You can't escape out of that. Let us say Companies Act doesn't provide, but you got the standard which is coming in your way. That's it. Okay.
Thank you.
Yeah. Keep asking any question from any point. I don't mind because this is a routine that I have to cover. Therefore, I'm doing that. But in between some questions like this come, I'll be very happy to answer. Audit committee. I don't want to speak much about it because the subject matter of the audit committee is not important for us. Okay. I already told you all listed companies and those public companies which are not listed having paid up share capital of 10 crores or more, compulsorily they will be maintained in audit committee. 177, whatever transactions have to go to, compulsorily it has to go through the audit committee. Constitution of audit committee, I already discussed. Okay. And I've also discussed with you regarding arm's length transaction OCB stops at audit committee. Doesn't have to go to the board. Doesn't have to. Very clear. But if you still want it to go to the board, and normally that's how it happens. It goes to the board. Normally, as a practice, it goes to the board. But not necessary because the law says as long as in the ordinary course of business, arm's length pricing, audit committee will approve. Audit committee has to approve even if everything is all right. Has to approve. Approval starts there. But in the case of board, approval is not sacrosanct because this approval has already happened. It takes it on record. That's important. But the other way around that the board approves doesn't go to the audit committee is irregular, not illegal. I don't want to say illegal. But when does it become illegal? That it does not go to audit committee at all. Then it is illegal. It has to go to the audit committee. Okay. Now let us assume without going to the audit committee that transactions have happened. We have ignored and suddenly we wake up and then see, oh, this should have happened. Within 3 months, it has to get the approval of the audit committee, or if audit committee is not there, the board. Now, the question that comes again, is that what happens? Suppose it doesn't get approved within 3 months. Voidable at the option of the company. Company can avoid it. Then if there's any damage or loss suffered by the company, then the person who is responsible, people sitting in the audit committee or the directors, all of them will be responsible for something which has gone wrong, which I would say is illegal. When do you say something is illegal? Not according to the provisions of law. What happens if it is illegal? We have understood that it is illegal. So what happens? What happens when something is illegal? Huh? No, void, I agree. I've already told you. Over and above the void, what happens to the individuals? There's going to be imprisonment. There's going to be fines. Correct. That's how it is. Then whenever the meetings are held, interested parties should not participate in the meeting. They must simply get out of the room. That's a requirement, whether it's in the audit committee, whether it's in the board, whether in the shareholders meeting. Interested parties, where there's a conflict of interest, should not be present in the board meeting. And that's part of governance and that's part of law, which we understand that very clearly. I don't think. Then government companies, no need. They don't have to take any approval anywhere. No approval is required where contracts are entered into with any government company, another government company. You don't have to take any approvals. Only condition is that the government company should have filed its financial statements to ROC. Annual return has to be done. Otherwise, they are not eligible for this. We have this one particular PSU, which has not filed its returns. Everything that they got exemption goes out because they are not eligible for that. And therefore, it uses room for us to qualify the report to say that the company is not eligible for the following facilities. And that's a qualification which is required. If you don't qualify, then there is C&AG sitting there watching whether we are going to qualify that or not. Therefore, we have to be very careful. A lot of things which does not apply will start applying when once they have not filed their annual return or financial statements. We have to be careful. Anybody who's doing public sector undertaking audit, take care. Very important. Lot of times, directors have not taken DIN at all. You know what is the consequence of that? Any resolution passed is void. And there is an internal circular in C&AG which clearly tells that if DIN is not, first thing they will ask, is there DIN for all the directors? Otherwise, they say, who are the directors who are sitting in each of these meetings? Did they have DIN or not? It's void. It cannot be applied. So those issues will come. So see, the question is to understand the law on the surface of it, all of us understand it very well. But when you go deeper, there are certain issues that we have to delve upon. Please do that very clearly, because repercussions are that though you have done your audit process very well, one small issue will creep up and then destroy the whole documentation that you have done. That people will ask, did you have a DIN that is sat on the board? One. Then did they file financial statements and annual reports to take these benefits? Lot of issues are there, and therefore we have to be careful while doing audit of public sector undertakings. Vote on a resolution, I already told you. There should be no default in filing financial statements, I've told you. Otherwise, none of these will, whatever exemptions are there, will not apply. So then, failure to disclose director's interest in any contract arrangement, I've already told you, first board meeting, they have to. And if there are any changes subsequently, they have to. Then at the time of entering into contract, they have to. It has to come to the surface all the time. Threshold, I've already told you. Then it talks of section of the read with rule 8 to the companies requires reporting of material transactions, related party transactions in AOC2. What is this AOC2? Every board report will have to carry not what we have done in notes to accounts, irrespective, not what you have stated on financial statements, irrespective. The board report will have to contain in AOC2 the transactions that take place between related parties. Please don't go into issues whether it is, what is it, material, not material. Anyway, that responsibility is not on us, it's on the directors. But we do advise directors many times. So just get them reported in form AOC2. Another issue is, I agree that the board report is signed, but AOC2 has to be signed again. Don't leave it blank, assuming that it's an annexure to the board report. Don't assume that. It is very clear that EOC2 has to be signed by the person signing the board report. Whoever is signed, nobody else can sign, only the person who has signed the board report. If chairman has been permitted, chairman will sign. If there are two directors who are signing the board report, then two directors will sign. Same thing will have to happen. So that has to be taken care. So you got MBP1 relating to directors disclosing in the first board meeting, MBP4 relating to register of contracts with related parties, then AOC2 being part of the board report as an annexure with respect to material related party transaction. Auditor's report, Caro, you will have to mention what is a related party transaction and to give full details of regarding that. And I think enough has been dealt with that in this one itself. If you follow that, I think that's good enough. Yeah, 189, I've told you, it relates to maintenance of MBP4, right? See what happens. It will be in the form MBP4 and is to be maintained for 8 years. Though there is threshold of rupees 5 lakhs, they say up to 5 lakhs transactions with related parties, you don't have to really record that in MBP4. But my own advice is kindly ensure that you, whatever may be the transactions, kindly record it in MBP4. Very important, get that done so that at least you have control about transactions that take place with related parties. Contravention, if it's voidable, company has got the power to void. So who takes a decision? Not the audit committee, but the board. One. And then any loss suffered by the company, the person has to indemnify. Then in case of listed company, look at that imprisonment for a term which may extend to 1 year. Fine, not done less than rupees 25,000 and may extend to 5 lakhs. Then in case of other companies, it is restricted to fine only, no imprisonment. Then 189, if you don't maintain a register, general provision, one is 25,000. Then there's also a general provision, 10,000 under section 450, 10,000, 1,000 for every day of default until the default gets corrected. As soon as there's a default on this, even without any resolution, the position of the director in the board gets vacated. It's compulsory. There's no need to pass a resolution to throw him out or go to shareholders for approval. No. If he contravenes this, then imprisonment for 1 year, which may extend to fine, which may extend to up to 1 lakh, 50 to 1 lakh, they say. And if he's convicted, is disqualified and is convicted for the next 5 years of being a director in a company. Once you have been removed as a director, you can't act as a director. That means your directorships in all the companies will go. So that's the responsibility. General penalty, I told you 450. So these are the issues. Now there's some more time I can deal with some other material which I have got. What is the time now? 3:30. How long have I got? Half an hour more? Yeah, I'll deal with some more issues. Unless if you have any questions, you please ask. Yes, please. My God.
Yeah, so two questions. First one is relating to the definitions of related party. You said that the person under whom whose instructions or directions the director operates is a related party. So practically, how do you identify such people? Because informally, they may be taking this thing from everyone.
One.
That is one. Second one is the transactions between two subsidiaries. You said as per Ind AS 24, I have to show it in my
Consolidated financial statements.
Consolidated or standalone?
CFS.
But in consolidation, what would happen is the transaction between B and C limited. Let's say I'm A limited and B and C limited are my subsidiaries. The transaction between B and C limited will get eliminated. So where is the question of then disclosing the?
Even if it gets eliminated, Ind AS says, I would like the shareholders to understand that there was a transaction between your subsidiaries.
Okay.
So they say disclosure.
Okay.
So because it's getting eliminated, they say disclose it.
Okay, as a note or something.
No. Disclosure requirements under Ind AS 24.
Okay. In a related party, not only, but
whenever you have a related party disclosure in your notes to accounts, you will have to bring that there.
Okay.
Okay.
And,
Now the first one was
the person under whose
Okay.
this thing.
Now the question is, lot of things happen, not only in our public life, but also in the government, which is not documented. Okay, you have overheard.
Hmm.
Overhearing is not sufficient for you to qualify or do anything.
Yes.
You should just keep quiet. Many times you are keeping quiet and ignoring a lot of things because you don't have an evidence. What does your standards on auditing say? Unless you have an evidence at your disposal, you cannot throw stones at others. You have to be very careful, very, very careful. Okay. Now, we have got into problems many times that we want to say something, we have it in our notes, but we can't say because we are not able to gather evidence. What I learned in CNTG was, unless you have got a key document, nothing can become an audit para. Nothing. You know 100 things, but then you need a key document. Will you be able to, they ask us, will you be able to get a key document? We'll consider, otherwise this para is getting dropped. Would have put in days of work. You can do nothing. And that's the problem with respect to audit. You are a tiger, no doubt, but you're a toothless tiger. And only people who can take action are people who have got that teeth. Be very careful. You can't throw anything on anybody unless you are sure you have a key document. Okay. Any more questions? Yeah, please. Mike. You have got a mic here. Okay, sorry. Huh.
This question is with regard to same on lines with what friend has asked. There are two companies. This is a practical situation where there are two companies. One of the companies' turnover is about 5,000 crores. The other company is
Maybe a few crores.
2,500 crores, but the entire sale is to this company itself.
Yes.
Now, none of the directors are common, nor are they related.
Agreed.
None of those criteria under that. But would they still, because it is very visible that, the transaction is being routed through that company. In those circumstances, how is the reporting there?
Right. I'm asking, is there an arm's length price? One by one. That's the first question I will ask. If I'm not been influenced, now the other company will always say, see, your entire turnover is coming to me. There's another party who's offering me at 100 rupees. Would you be willing to offer 80 rupees? Then they become related party. They have got the power to influence, significant influence. Then in which case it's a related party. But if I do it at standalone basis, arm's length, without being in the ordinary course of business, I have no business to even discuss that issue that he's a related party. He doesn't care. If you are not there, I've got somebody else.
The influence is actually there. Minuscule market is retained in this company just to root the turnover.
Related party. I'm making that point very clear. Related party. Because you are creating artificialities into the system. That means you are being controlled or you are controlling the other. Control, influence, significant influence. And okay, even if Companies Act doesn't say, your accounting standards is saying, corporate governance is saying, you've got a corporate governance report to be given. Then you'll ask, sir, what if corporate governance is not applicable to me? Accounting standards will apply. So you have to be careful. So what do I say? I will say, go with an open mind to say, for us, it's, what is it? We always go with a mind that something is wrong. But then ask them to give documents, convince yourself. And then probably you'll have to convince yourself to take a particular stand. That stand is to be taken by the auditor based upon facts and circumstances surrounding the case. And you have to defend for yourself. Right? So that's how it happens. Now, I'll tell you when all these issues will come up. I'm honest. When you confront something, then you have all these things coming up. You go with somebody, life is more easy. Nobody understands, nobody discovers. But you say, sorry, I'm going by principles and I'm going to confront you. Then he will also confront me and I must know how to defend that. That's where I said that unless you have evidence, better would be you have to keep quiet. Is that okay? Yeah. Any other questions?
Sir,
Please
I
ask.
have a question.
Yeah, please.
Sir, so how do we define contract with related parties? So is there a mandate to have an agreement in place?
Always contracts are evidence-based, right? How should the contract be? How should the agreement be? Has it to be on stamp paper? For me, let me tell you, a purchase order is a contract, right? So anything that's a written document, which can be proved to be an evidence, that should be enough. Because there are places where stamp duty is payable, in which case you can't do on a normal sheet of paper. Where stamp duty is payable, you have to pay the stamp duty. And you want that to go to the court of law, then along with your stamp duty payment, along with penalties that are associated with that, only then it will enter, otherwise it will not enter into the court of law.
So, sir, I think then we should have a contract always before entering into a related party transaction.
Any transaction for that matter is a contractual arrangement. It can either be written or oral. Now, because the constitution in India allows for oral, many other countries don't. Now, the question that comes up is, did I have a contract? What are the elements of a contract? What are the elements of a contract? There must be two or more persons. One. Then there must be a consideration. Two. Then there must be with persons who are competent to contract. Three. Then fourth one is you are not dealing with people who don't have a competence. I've already spoken. Then it must be legal. Fourth. Then the fifth one is offer and acceptance, and with consensus ad idem of the same mind. Suppose somebody says, I want to sell 2 horses to you. Another person says, no, I want to sell 1 white horse and 1 black horse. Never fructifies into an agreement. Only 2 exceptions to a contract. All moral contracts are not contracts, cannot go to the court of law. Gift, though it's consideration flowing only from one side, still it's a contract, because love and affection is the part of that particular contract. See how clear? Now, what is a contract? It can be written, or how do you prove that unwritten contracts are also contracts? By virtue of an evidence, by virtue of a practice. Like, for example, we have had a case law on that. 10 years you've given bonus, you have not given it in the appointment letter, but then 11th year you don't want to give, though there is profit. Court said, sorry, by practice you have proved that you're going to give bonus to people. 11th year, even though it's not in the contract, it is deemed that a contract has been entered into because expectations have been created, therefore pay the bonus. See how clear? And that's what law helps you. Law helps you to defend yourself on the right way, right principles, right methods. And that's where we have to work. Anyway, good that you asked this question. So contract need not necessarily be on stamp paper if it is not to be stamped. That's all. Very simple.
Sir, one small doubt.
Please.
A transaction should happen, no? Just a contract is not sufficient. There
No,
should be
tell me-
transaction.
Yeah.
So suppose you enter into a contract with the related party, but there's no transaction during the financial year.
Now let me
So
ask
that
you,
cannot-
what's a transaction? What's an event?
Suppose I enter into an agreement with somebody that I'll supply so much related party, but I don't do any supply during the whole year. So
No,
then even if there's a contract, there's nothing.
Then no,
report
there's
there.
no transaction at all.
So that's so to answer her question, whether contract is there or not, transaction is there, that's good enough.
No, but then what happens in most of the contracts, if you don't do, there is something else that I'm going to recover from you because I've got into a damage. See, all moral contracts you can avoid. Somebody calls you for a marriage, you accept it. There's an offer and acceptance. Do you mean to say it's a contract? No, it's moral. I don't have to go. It doesn't go to the court of law. But I've entered into a transactions and I'm giving a clause which says if you don't supply, I'm going to do this. Then what happens? If you're binding, then a contract is there. If it's not binding, there's no contract.
No, sir, most of the times we have just a rate contract saying that for whatever I take from you, I'll pay at this rate.
Correct.
Suppose there is no transaction during the year. So
Correct.
there is nothing to report.
No, merely because we have decided upon terms of a contract doesn't mean there's a contract. Contract 5 elements have to be there. Consideration, consensus ad idem, all these things have to be there. Merely because we accepted on a rate is a term of a contract. Term of a contract is not an essential element because it can vary from one contract to the other. The question is, that's why I'm asking, what's an event? An event is not a transaction because there's no consideration. When there's a consideration flow, then only transaction take place. Otherwise, it can remain an uneventful issue.
Nothing to report in that case.
Nothing to report. If there's nothing that has happened, there is no transaction at all. I agree. But that's not the only thing. While having the transaction, how do you report? Some of those issues will come. When there's no transaction at all, what is there to report? Because I have a relative, I've reported in the first board meeting who are my relatives who are likely to come into contract with you. Does that mean that it creates an obligation for RPT? No, because there's no transaction at all. I'm a related party, no doubt, but I did not enter into a transaction. So therefore, RPT disclosure doesn't come. Am I clear? Right. One element I can understand. There's no transaction. What is there to report? I absolutely agree with you. Yeah. Relative of a
managing director.
Right.
This is a transaction related party.
One is you're telling it's already a relative. Relative of directors are related parties according to definition. Now, appointed as managing director, my only question is it less than 2,50,000 per month or more than 2,50,000? If it is less than 2,50,000, no problem. If audit committee is there, audit committee. If audit committee is not there, the board. If it exceeds 2,50,000, go to the shareholders, get the approval. That closes the matter, but disclose it. You have to, sir, KMP. All we are already disclosing. Accounting standards are asking you for that. You're already disclosing. I don't see that any related party KMPs you are not disclosing. You are disclosing because accounting standards are asking for it. That's why I'm trying to tell you one thing you should remember. Sir, company law doesn't say that. If you make that statement, I would prefer look at all the provisions, find out the maximum that you have to report it. That's important because you don't know where you're going to miss. What information you have got, just report it. Put it into a succession table and then report it. Okay, am I clear? Right. Any other questions you can ask, but I'll try to take you to some interesting issues. Let's see. There are many things more, but then I must go systematically. Therefore, I'm trying to hesitate to cover more issues because time factor. Yeah, some examples are there. Let's have a look at that. Now, okay, arm's length price, somebody is asking. Would you like to go through that? What is arm's length price? They have given for every type of examples they have given. They say what's some things I've already covered. Yeah, sale, purchase, supply of goods or materials. If you ask, TP guidelines, transfer pricing guidelines. Okay, leasing properties, TP guidelines. Common infrastructure, canteen, administrative facilities, JV agreement should exist. Cost plus margin method accepted. Then appointment and remuneration of directors. We already have said 2,50,000. Beyond 2,50,000, go to the shareholders, take the approval. Shared services, cost plus margin method. Not necessary that you should go by this. If you have got any other method, please take, because even in transfer pricing, let me tell you, department can say what it wants to say. But if you've got evidence to prove that something is much better, you will have to go by that and rely upon that. Okay, a lot of transactions have been providing guarantees. Guarantees does not come under section 188, but take it from me, your 186 or 185 will cover and therefore disclosure is required. Average rates charged by banks, including any loans given to directors, they will say SBI rate at the end of last year, all those issues. Generally, I think for uncomplicated transactions, you will get your arm's length price very easily. Then I've also told you approval process, which I don't want to get into that again. Payment to non-executive directors. Yes, you can, subject to the condition that you have to get the approval from shareholders because he's a non-executive director. Apart from that, he should not participate in the meeting for voting. See, look here. There's a parent, subsidiary A, subsidiary B, subsidiary C. Subsidiary A has got one associate. Subsidiary B has got an associate. Subsidiary C has got an associate. All of them are related parties. If you look at parent, it has to disclose the associates transactions, subsidiary ABC's transactions. If you look at subsidiary A, parent, subsidiary B, subsidiary C, associates. But if you go to associate, they are not related parties with respect to other subsidiaries. Maybe with parent, yes, but not with respect to other subsidiaries. So like this, it will go on defining. For parents, separate financial statements, subsidiaries ABC and associates 1, 2, 3 are related parties. For associates 1, 2, 3, parent and all subsidiaries are related parties. This is there. Between associates, it's not a related party. Between associates, between associate 1 and associate 2, not a related party. But parent and subsidiary ABC are related parties. This is paragraph 9 of Ind AS 24, which is much more exhaustive when compared to Ind AS 18. AS 18 is restricted, but Ind AS 24 is exhaustive, including transactions taking place by subsidiaries outside the country to be reported. Yeah, you look at this again. There's this one here. and then say in entity C financial statements, both A and B are related, because now the only issue that events, for example, let us say X and entity B, KMP is there, then A, C, B, all of them will get converted. So these are all issues which come in the Ind AS, where even remote, it will get covered. Okay. Ind AS 24, again, para 9. Am I going back? I'm not sure. I don't know. I've gone back to the old. Yeah, I think I've almost covered, unless there is something more interesting, which I will try to cover. I've done this, I've done this. This I don't want to speak much. Okay. Z is a subsidiary. Section 88 does not get attachment transaction. Y and Z. X. Okay. X is a holding company in India. Why? I have told you this. This particular thing has been explained. So which are the provisions which will apply? All the provisions, if you look at 48(2) of the income tax law, related party transaction, then clause 23 of form 3CD, then beneficial owner, a person being a beneficial owner of equity shares, that's what gets covered in income tax law. Under GST, we talk about distinct persons, associated businesses, schedule 1, irrespective whether consideration is paid or not, it's a supply. Okay. SEBI, I've already talked. Ind AS 18, sorry, AS 18, Ind AS 24, LODR, I've spoken. Then see, look at Ind AS 24 and AS 18. There's quite a bit of difference between the two. So I don't want to take you through that. I'm just telling you, just highlighting those issues. 185 and 186 I've covered. Okay. Under listing obligations, what is not a related party transactions? Again, there they're going to say payment of dividend, normal course of business, not an RPT. Subdivision consolidation of securities, not an RPT. Rights and bonus issue, buyback of securities, acceptance. That means you don't have to go through the audit committee procedure, don't have to go to the board. It has got its own way of dealing with all these issues. Therefore, deal it separately. Don't deal it under section 188. That's the implication. Ordinary course, I have told you what ICA has said, what is not in the ordinary course of business. Penalty provisions, I've already told you. 184. 184 deals with disclosure by directors in the first board meeting. If they don't do that, imprisonment up to 1 year and fine not less than 50,000 and up to 1 lakh it can go. Section 185 relates to creation of book debts, loans to directors. It talks about a fine between 5 lakhs and 25 lakhs. Look at this sudden jump, 5 lakhs to 25 lakhs. Concerned person, imprisonment of 6 months and a fine as above. Same, 5 lakhs to 25 lakhs. Section 186 deals with investments and loans with other associated companies. Again, 25,000 to 5 lakhs. Person contravening 25,000 to 1 lakh now instead of 5 lakhs with imprisonment up to 2 years. Imprisonment is more. Section 188 related party transaction, 1 year imprisonment and fine between 25 to. Now, if you ask me this question, sir, will they really levy? We have examples where they really levy. Really levy. So when it comes to their notice, nobody wants to care. They say, okay, after all, let them pay. I was independent director in one of the companies. Luckily, after I left, they received notices. Our name is not appearing there, but all of them had to pay hefty fine. And whether company compensate or not, I don't know. Company cannot compensate. That's a different issue. Okay. MBP1, MB4, AOC2. I've already discussed this issue. So thank you. That's it.
Compliance should not be compromised when we get the assignment from our related parties. Many things from definitions to caveats, both to the organization and the auditors was very well dwelled upon by CA K S Ravi sir. With his in-depth knowledge in the subject, vast experience for more than 3 decades, handling many clients. Passion about subject and teaching, and the practical experience can only bring out these points. A round of applause for that wonderful session. On behalf of members present here and all the managing committee members of Bangalore branch of SIRCF ICI, we would like to hand over a memento to the speaker as a token of gratitude and respect. Can I request CA Pradeep sir to come out to dais and then do the honors? Thank you.